Welcome to this explainer. Okay, today we're unpacking a really wild corporate story unfolding in the markets right now. We're looking at Larsen Toubro, a classic heavy metal infrastructure giant, and their surprisingly strong stock performance right after their Q1 FY27 earnings surge. But wait, it actually gets crazier. They're making a massive multi-billion-dollar leap into the future with gigawatt AI infrastructure alongside Together AI. Seriously, we're talking about a massive pivot from concrete and steel straight into silicon. Let's get right into it.
So, let's dive into this because this is where the mystery really kicks off. Following that Q1 FY27 earnings surge, L&T's shares actually jumped nearly 2.7%. Now, on the surface, a stock going up sounds completely normal, right? But when you actually peek under the hood, it was a surprisingly mixed bag. Their core operating margins were shrinking. And you know how it goes. Usually, when margins drop, investors hit the panic button. So why on earth was the market cheering? Well, let's break down the numbers.
There's a pretty stark contrast here. On one side, boom, a solid 14% jump in profit after tax, hitting 4,123 crore rupees. I mean, that is a fantastic headline number. But right alongside it, their core EBITDA margin, which, as we know, measures pure operational profitability, actually shrank from 9.9% down to 9.0%. And this is the central paradox of L&T's first quarter. How in the world do you grow your bottom line profit by 14% when the core business itself is actually getting less profitable to run?
Section 1. Decoding the profit surge, non-operating buffers. To figure out this paradox, we have to peel back the layers past those flashy headline numbers. In their core operations, they were facing some serious supply chain bottlenecks, especially in their solar division, plus a shift in their sales mix that really squeezed those margins. So that profit surge, it definitely wasn't coming from stronger project profitability. Nope, it was actually driven by non-operating buffers. Basically, things completely outside of their day-to-day construction and engineering work rode in to save the day. The accounting wizardry that saved L&T's bottom line here is actually pretty fascinating. Their other income totally skyrocketed by 75% to 2,378 crore rupees, mostly because they had more surplus cash and just scored better yields on it. But here's the real kicker. Their finance costs plummeted by a massive 31%. Why? Because they completely dropped the heavy interest costs of the Hyderabad Metro from their books starting in May 2026 as part of a strategic divestment. Add to that, their net working capital tightened up beautifully to just 4.9% of revenue. So honestly, clever capital management and financial engineering did the heavy lifting this quarter.
Section 2. A historic order book, visualizing scale.
Now, if those core margins were weak, why are investors still scooping up the stock? Well, this is the magic number right here, 7.79 lakh crore rupees. That's L&T's total order book as of the end of June 2026. Guys, that is a staggering 27% increase year over year. What this tells us, without a shadow of a doubt, is that L&T absolutely does not have a demand problem. The world is quite literally begging for what they build.
To put that massive, almost mind-boggling figure into perspective, that backlog is exactly 2.7 times their entire total revenue for the previous financial year. Think about that for a second. Even if they didn't sign a single new contract starting tomorrow, they've got nearly 3 years of revenue already locked and loaded. That kind of visibility is incredibly rare, and the market absolutely loves it.
And this split perfectly illustrates how their entire identity is shifting. The order book isn't just huge, it's aggressively global. We're looking at 52% international projects versus 48% domestic. L&T isn't just building India anymore, folks. They are rapidly turning into a global EPC powerhouse. That's engineering, procurement, and construction, just winning mega projects left and right on the world stage.
But, international growth is a bit of a double-edged sword. A whopping 37% of their total order book is tied up right in the Middle East. And while they're seeing explosive growth there, and also over in Europe with these ultra-mega offshore wind projects, this global exposure brings some pretty profound risks. The current geopolitical conflicts in the Middle East are actively messing with their supply chains, sending logistics and insurance costs through the roof. And actually, that is exactly what pressured those operating margins we talked about earlier. So, pulling off this massive backlog flawlessly, that's going to be their ultimate test.
Section 3. The gigawatt AI pivot, from steel to silicon.
All right, just when you think you've got L&T pegged as this traditional builder of bridges, refineries, and power plants, they throw the ultimate curveball. Listen to this quote from Chairman and MD S.N. Subramanian. He says, "We embark on another 5-year journey of Lakshya 31 to make the organization future-ready through accelerated adoption of AI and investments in data centers and semiconductor technologies." I mean, wow, management isn't just obsessing over the next quarter, they are charting a visionary course totally away from legacy infrastructure and steering this massive ship straight into deep tech.
And they aren't just putting out press releases, they are putting serious billions on the table. Enter the Together AI mega contract, valued somewhere between 10,000 and 15,000 crore rupees. This is a mammoth partnership that is honestly the ultimate plot twist for an old-school infrastructure firm. They are officially stepping into the ring to build the fundamental plumbing of the artificial intelligence revolution.
To really grasp the sheer, unbelievable scale of what they're attempting, get a load of this hardware requirement: 10,000 NVIDIA B300 GPUs. Let me be clear, this isn't some tiny server room upgrade in the basement. L&T is actively building India's largest AI factory. They are leveraging their immense capital to build the massive gigawatt AI infrastructure, where the literal next generation of AI will be trained.
To actually pull this off, they've spun up some very specialized entities. Meet Vyoma AI and its infrastructure arm, LTN Compute. These are L&T's brand new digital subsidiaries. Their mission? Deploying this gigawatt-scale cloud and physical AI infrastructure directly at their massive data center campus down in Chennai. It's a huge strategic leap, moving seamlessly from building lower-margin public roads to owning and operating the incredibly high-margin digital infrastructure of tomorrow.
Section 4. Valuations and Future Outlook.
Okay, so with an order book literally bursting at the seams and these sky-high future tech ambitions, we've got to ground this back in concrete financial reality. The real question is how management views the rest of the year. Well, despite that somewhat sluggish start on revenue growth in Q1, they are actually sticking to their guns on full FY27 guidance. They're targeting 10 to 12% growth in both order inflows and revenue, while keeping core operating margins holding steady around 7.8%. But listen, to actually hit those numbers, especially the revenue growth, L&T is going to need to hit the gas on execution in the second half of the year. They've won the orders. Now they literally have to dig the dirt and lay the cables.
And the market experts seem to think they can absolutely do it, which is obviously great news for Larsen Toubro stock performance. The analyst community is staying incredibly bullish on this entire transition. The consensus price target currently sits between 4,400 and 4,671 rupees. Considering they were trading around 4,040 during this whole earnings cycle, analysts clearly see a massive runway ahead, totally fueled by that historic backlog and the sheer hype around their new AI ventures.
Which leaves us with one incredibly provocative question to wrap up this explainer. Can L&T successfully build the physical infrastructure of the world while juggling crazy global supply chain crises and geopolitical tensions, and simultaneously pivot to build the gigawatt digital infrastructure of the AI revolution? It's an unprecedented, almost unthinkable dual ambition for a company of this age and size, and honestly, watching whether they can actually pull this off is going to be one of the most exciting corporate stories of the next 5 years. Thanks for learning with us today.